Hello everyone and welcome back to Finance JCL, the show aimed at new and intermediate level investors. For today we're going to be looking at Bank OZK, which is an American bank, and it's going to be a company review and then a valuation. So this is the latest in a series of valuation videos that I'm going to be doing, and I've already done one on Apple and I'll drop a link in for you for that one just above. So the objective for today is to review the key metrics for Bank OZK and then decide from my personal perspective if it's a suitably strong company for long-term investment. I don't suggest you necessarily copy me directly. You should make your own calculations and take your own advice. And then I will demonstrate what I think my buy price is with that margin of safety, and then whether I'm actually going to buy it now. So those are the key questions for today. And this is all going to be in the context of discounted cash flow. So I'm going to assume that I'm buying the whole business. I want to calculate how much cash it will generate over its lifetime, and then discount that back to today's value, and then divide it by the number of shares. So how much cash per share is it going to be producing, and based on the amount of cash it will generate, I can assign a value to it and then compare that to the market price to see if it's worth buying. So that is my primary method of valuing a company. But just to even take you back a step further, why Bank OZK? Well, actually it's a company I already hold. I've got an existing position in it. And I want to decide whether I'm going to double down and increase that holding, or indeed whether the position has changed and I should sell the holding. So my usual mandatory metrics. So does it have a positive cash flow? And the answer is yes, so it passes that. Now, does it have a stable or growing net income or net profit? And again, the answer is yes. It's a very good history for that. Now, the current ratio isn't applicable for banks in the same way that it is for businesses, because they don't have assets and liabilities in the same way. So we can move on to, is the ROE above 8%, return on equity? And in the short term, it's 8.21% for the most recent figure, so it's just above that minimum. And over the last 10 years, the average is 16%, so that's double that minimum level, so that's pretty decent. Now, the debt to equity needs to be less than 2, and it's 0.34, so that's fantastic. So not very much debt in this bank at all, which is good based on the difficult market that we're in at the moment. We don't want too much debt on a company. And the interest coverage therefore is larger than 6. And that net income is positive. So it's good history. So the mandatory minimums that I need to see in a company before I even value it, they're all present. So we can move on to that next stage. Now, all of this can be found on the Morningstar website, which is one I like to use. I get 10 years worth of history on that, so I can look at the trends, not just look at the numbers in isolation for the last 12 months. So I'd recommend that to you as a good source of information. I'll put a link in the description box below. And of course, on top of those metrics, would I actually hold this bank for 10 years, having taken into consideration, looking at the trends, looking at what I know about the management? And absolutely, on this particular bank, this particular company, the answer to that is yes. I would be very happy to hold it for 10 years or more. I think the CEO's been there for a very, very long time. I think it's 40 years or more. A lot of experience in the management. It's got a really good history. So this is a great company from my personal perspective. So now that we've looked at those minimum values, I want to kind of up the ante a bit. And what are the desirable metrics? So the more of these that there are, or the higher they are, the more likely I am to invest and invest more into the company. So I want that net profit figure not just being positive, but actually want it to be over 20%. And in the last period of 12 months, it was almost 34%. And in fact, over the last 10 years, the average is almost 39%. You've got a bank here with a massive profit margin. This is incredible. It's a level of almost 40% in the last 10 years. It's exactly the sort of company that then has sufficient ability to adjust pricing, absorb shocks, the profit margin at that level. absolutely fantastic. Return on equity isn't over that 20% level, but it is still above the minimum. It's pretty decent. The return on assets is well below that 10%, 1.38, so it's pretty minimal, and it does tend to be a bit lower for banks, but that's pretty low. And thinking about the free cash flow, now the business generates a lot of cash flow from its operations. You then take off CapEx, capital expenditure, to get to that free cash flow figure that I've mentioned. And that's how much the business generates in cash for its owners. Now, if there are high CapEx requirements, then the business can make loads in cash, but it won't translate into free cash flow. For this business, there isn't much CapEx requirement. So most of the operating cash flow it generates from its operations ends up in the free cash flow piece. So that is good news. Current ratio not applicable, as mentioned on the previous discussion. And the debt to equity is less than 0.5, so the minimum is less than 2, and it's less than 0.5 here. So that's a pretty decent position to be in on the desirable metrics. In terms of the kind of less, what should we say, numbers, but more of a kind of emotional point. Is it a company you think of as it in the mind? So if you say mobile phone, a lot of people say Apple. If you say fizzy drink, people say Coca-Cola. If you say computer program, people might say Microsoft. However, if you say bank, I wouldn't suggest that this bank is the one that people say. I think there probably isn't an overall leader here. So that's no. However, it is a relatively medium-sized American bank, and in its area, it is a popular, well-known and well-performing bank. So perhaps it's no in the UK, where I'm sat here today, but in America it has a much higher presence. So I've put that as an amber. So following the review, does the company pass? Tick. Yes, it does. It looks pretty good based on those metrics. So the company, I think that's a wonderful business. I think it falls into that rare category based on all of that information. But of course, there's the question of the valuation. So my minimum rate of return that I want to achieve is 6.66%. However, I would ideally have 10% plus. So let's see how that kind of plays out with the margin of safety principle. And the margin of safety principle, as a reminder, is, let's say the valuation says you're going to make exactly a 6.66% return, it's priced bang on, I will not buy. And the reason for that is I want a margin of safety. So A, I'm buying on sale, so that there's an upside, and B, I could quite easily make mistakes in the calculations. I'm basing my calculations, my personal calculations here, on the historic record. What I don't know is what's going to happen in the future. I can guess, but the guess is always going to be wrong because no one can predict the exact future growth of a company. So having that margin of safety is very important. And I flick between two margin of safeties, 50% or 66%. And it's a wonderful company that I've read up on, and I've got conviction, and it's got really strong desirable metrics. I'll go with that 50%, so I don't need quite as big a margin of safety. So the actual cash flow analysis, all of that considered, looking at the 10% return scenario first of all, the outcome is that I value the company at $40.57. Therefore, with a 50% margin of safety, the buy price would be $20.29, so half of that $40.57. But the actual market price is $23.80, so it's not quite at the buy price. Now we're going to be very strict here because buying at that price would actually significantly reduce the potential return, even though it's fairly close. So therefore, am I going to buy in at this price? The answer is no. In theory. However, I'll keep an eye on it because it's quite close, so it may drop. So then I switch my attention to, actually, if I discount the future cash flows at that 6.66% rate of return, so my minimum rate of return, the business has a value of $73.66. Therefore, with the 50% margin of safety, the buy price becomes 36.83. So you can see that the market price is significantly below the buy price. It's about a third lower. So therefore, there's a decent margin of safety there, even greater than 50% in fact. So therefore, based on the financial calculations at least, this is a buy for me. Okay, so what's my next action going to be? Well, is it better than my existing stock? Actually, that's sort of not applicable because it is an existing stock, so I have this in my portfolio. But am I going to buy more of it? And for me, yes, I am going to buy more of it. And the reason for that is it's only 2.2% of my overall portfolio, so it's a relatively small proportion. But based on my research and the calculations I've done, it's actually one of the better companies that I hold. And the price is below the margin of safety price for that return that I want. So it makes sense to me to top up, double down, and increase my position rather, in this company. So it's already on the wish list again, because if we go back, it didn't quite meet that level for the 10% return. So it's at 23.80, I believe, and need to be around about 20 for that 10% return. So I'm going to add it to my wish list at that sort of $20 level, and when it hits that level, I'm going to buy even more of it, because I know then with a margin of safety I can get a 10% return. So I'm going to set up an alert in order to automatically email me when that threshold is reached, and your share broker should be able to do that. Otherwise, sites like Morningstar can do that. So in summary, I've done a discounted cash for evaluation. It passes mandatory tests. Bank OZK has strong performance in desirable tests. That market price is below the margin of safety, and that position will therefore be topped up. It's a wonderful company at a great price. So in order to close for today, thanks for listening and watching. I'd be grateful if you could support the channel and hit the like button in order that I can continue sharing this information with you. Thank you very much, and see you next time.